current asset in the form of cash or will be realized in cash or conserve the use of cash within the operating cycle or 1 year, whichever is longer. Typical example: cash, marketable securities, receivables, inventory, and prepayment. The operating cycle for the company is the time period between the acquisition of the goods and the final cash realization resulting from sales and subsequent collection. For example, a food store purchasing inventory, then sells the inventory for cash. The relatively short time that the inventory remains an asset of the food store represent a very short operating cycle. In another example, a car manufacturer purchases a material and then uses labor and overhead to convert this material into finished car. A dealer buys the car on credit, then pay the manufacturer. Compared the food store, the manufacturer has much longer operating cycle but is still less than a year. Cash. Cash is the medium of exchange that bank will accept for the deposit and the creditor will accept for payment. To be classified as the current asset, cash must be free from any restriction that will be prevent its deposit or use it pay creditor are classified as current. If restricted for specific short-term creditor, many firms still classify this cash under the current asset, but they close the restriction. Cash restricted from short-term creditor should be eliminated along with the related amount of short-term debt when determining the short-term debt-paying ability. Cash should be able to pay general short-term creditor to be considered as a part of firm short-term debt-paying ability. Compensating balance against short-term borrowings are separately stated in the current asset section or noted. Compensating balance for long-term borrowings are separately stated as non-current asset under the investment or other assets. The cash amount on the balance sheet is usually entitled cash, cash and equivalents, or cash and certificates of deposit. The cash classification typically includes currency and the unrestricted funds on deposit with the banks. Marketable securities. The business entity has varying cash needs throughout the years because an inferred cost arises from the keeping money available. Management does not want to keep all the entity's cash need in form of cash through the years. The available alternative turns some of the cash into productive use through short-term investment or the marketable securities, which can be converted into cash as the need resizes. To qualify as marketable security, the investment must be readily marketable, and it must be intended to management to convert the investment to cash within the current operating cycle or 1 year, whichever is longer. The key element of this test is the managerial intent. Investment classified as marketable security should be temporary. For example, of marketable security includes treasury bills, short-term notes or corporation, government bonds, corporate bonds, preferred stock, and common stock. Investment in prepared stock and common stock are referred to as marketable equity securities. Receivables. An entity usually has a number of claims to future inflows of cash. These claims are usually classified as account receivable and note receivable on the financial statement. The primary claims that the most entities have comes from the selling or merchandising or services on account to customers, referred to as trade receivables, with the customer promising to pay within a limited period of time, such as 30 days. Other claims may be from sources such as loans to employees or the federal tax refund. Valuation. There are two major problems encountered when analyzing a current asset: determining a fair valuation for the asset and determining the liquidity of the asset. This problem applies to the cash asset only when it's been restricted. Thus, it is usually a simple matter to decide on the amount of cash to use when determining the short debt paying ability of an entity. The common characteristic of receivable is that the company expects to receive cash sometime in the future. This causes two valuation problems. First, a period of time must pass before the receivable can be collected, so the entity incurs the cost for the use of this fund. Second, collection might not be made. The valuation problem from the waiting to collect is ignored in the valuation of the receivable and the notes classified as current asset because of the short waiting period of time, the immaterial difference in value. The waiting period problem is not ignored if the receivable or note is long-term and classified as investment. The stimulated rate of interest is assumed to be fair except when no interest is stated. Day sales in receivable. Gross receivables or the net sales or in 1 year or 365 days should be mirror the company credit terms, reading the reflects and end of the year status of receivables. Use the natural business year. Lower sales at the year end can be understate result. Compare the firm of data several years and the other industry firm and the industry average. Cause the overstatement, sales volume expand the materiality late in the year. Receivables are uncollectible and should be written off. The company seasonally dates invoice. A large portion of receivable are on the installment basis. Causes for the understatement, sales volumes decreases materially late in the year. A material amount of the sales are on a cash basis. The company has manufacturing arrangement in which material amount the receivable is sold in outside party.
Hi, I'm Loreline Veronian. I'll be discussing the next topic. So, una is notes to consolidated accounts in balance sheet. So, ito daw is tinatala ng detalyado ng mga accountants at mahalaga daw ito upang lubos na maunawaan ang nilalaman ng documents. Next is the lower cost or market rule. So, nagsasaad nga daw ito na ang isang negosyo ay dapat nakarecord ang cost of inventory sa alinman daw halaga, mababa man o sa original na presyo or sa presyo sa merkado. So, karaniwan nga daw nangyayari ito kapag ang isang inventory ay lipas na or bumaba na ang presyo sa merkado. Next is liquidity of inventory. So, nasusukat nga daw ito depende sa kung gaano katagal na ibenta ang iyong inventory. Kung mabilis daw maibebenta or makakakuha ng cash sa iyong na-inventory, nakakatulong daw ito sa iyong liquidity. At kung matagal na panahon daw ito bago na ibenta, so hindi daw ito nakakatulong sa iyong liquidity. Next is daily sales of inventory. So ito nga daw is average na bilang na inaabot para maibenta ang iyong na-inventory. Ang daily sales of inventory is isang sukatan ng mga analyst upang ma-determine yung kahusayan ng benta. So, ang isang daily sales of inventory ay nagpapahiwatig na ang isang company ay mayroong hindi maayos at mayroong inventory na mahirap ibenta. Next is inventory turnover. So, dito naman is na may measure kung ang inventory stock ay na-sold, nagamit, or na-replace. So, kinakalculate ito upang makita kung ang negosyo ay may labis na inventory compare sa level na benta nito. Next is inventory turnover days. So, dito naman ay kinakalculate ang average na bilang ng araw na hawak ng company ang stock bago ito i-rotate into sales. Next is operating cycle. So, tumutukoy daw ito sa oras na kinakailangang bumili ng goods ng company, ipagbenta ito, at makareceive ng cash galing sa nasabing goods. So, in other words, inaabot ng ganong katagal ang company bago ma-turn ang inventories into cash. So, ang haba nga daw ng operating cycle ay nakadepende sa industry.
Good day everyone, I am Karen Grace I. Hernandez and I will discuss the following. Account receivable turnover, account receivables turnover in days, credit sales versus credit cash sales, inventories, inventory cost, first in first out method, last in first out method, consolidated balance sheet. The first one is account receivable turnover. It means it is used in business accounting to quantify or to identify how well companies are managing the credit that they extend to their customers by evaluating how long it takes to collect the outstanding debt throughout the accounting period. It is an important indicator of a company's financial and operational performance. Next is account receivables turnover in days. In general, a higher account receivable turnover ratio is favorable and companies should strive or try to ensure it collects the full amount of average accounts receivable at least one time during a period, and to calculate the account receivable days of a businesses by dividing the pending account receivable with the receiving during a fixed period and multiplying it by the number of days at the time. Next is credit sales versus credit cash sales. It means the difference between a credit sale and a cash sale is the credit sale is a type of transaction where the buyer delays payment to a later date. This seller usually decides on this date when they make a sale. But even if the buyer pays in cash at a later date, it is still not a cash sale. And the cash sale is when a buyer pays for goods and services at the time of purchase. Next is inventories. It means it is the accounting of items, component, parts, and raw materials that a company either uses in production or sells. As a business leader, you practice inventory management in order to ensure that you have enough stock on hand and to identify when there's a shortage. Next is inventory cost. It means it is the cost to a business associated with holding stock or money that is in use in stock. By calculating the most economic order quantity, the firm attempts to determine the order size that will minimize the total inventory cost. Example is expenses incurred from storing, transporting, and handling inventory as well as labor cost incurred in those processes. Next is first in first out method. In theory, this means the oldest inventory gets shipped out to customers before newly inventory. Example is you need to label your food with the dates you store them and put the older foods in front or on top so that you use them first. This system allows you to find your food quicker and use them more efficiently. Next is last in first out method. It means it is the cost of the most recent products purchased or produced are the first to be expensed. LIFO is used only in the United States and governed by the generally accepted accounting principles. International financial reporting standards prohibits LIFO due to potential distortions it may have on a company's profitability and financial statements. For example, LIFO can understate a company's earnings for the purposes of keeping taxable income low. It can also result in inventory evaluations that are outdated or no longer in use. Last is consolidated balance sheet. It means it is a document that shows the entire financial situation of a parent company along with all its branch within a single sheet without separating the companies. It is provide a true and fair view of organizations' financial health across all divisions.
Good afternoon. So before I start, I am apologizing po for not being able to report to you virtually due to my work schedule. So first is the prepayment. So what do we mean when we say prepayment? Prepayment is an accounting term for the settlement of a debt or installment loan in advance of its official due date. So, halimbawa po nito ay nag-loan po tayo. Tapos po ay nagbayad tayo ng hulog bago ang ating due date. So, ngayon po, hindi po masyadong gamitin ang term na ito kasi ang kadalasan po ginagamit natin ay advance payment. So, advance payment and prepayment is also the same. Next is the other current assets or OCA. It is a category of things of value that a company owns, benefits from, or uses to generate income that can be converted into cash within one business cycle. So, alam naman po natin lahat kung anong sabihin ng assets. So, yun po yung mga ari-arian ng ating company. It may be a vehicle, shares, buildings, facilities, and such. Next is the current ratio. Current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. So, So, may nasabi po ditong term na liquidity. So, ano ba ang sabihin ng liquidity para mabilis nating maintindihan? Ang liquidity ay yung ating cash or yung ating assets. So, ang current ratio daw po ay kung kaya ba ng ating company na makapagbayad ng mga payables within 1 year. So, halimbawa, ang ating kumpanya ay nangutang sa bangko ng ganitong halaga. So, ang company ba natin ay kaya niyang mabayaran within 1 year yung kanyang niloan. So, yun po ang ibig sabihin ng current ratio. So, next is the asset test ratio. It is a strong indicator of whether a firm has sufficient short-term assets to cover its immediate liabilities. So, dito naman sa asset test ratio is sa asset test ratio naman po ay kung sapat ba ang ating mga assets para mabayaran yung ating mga liabilities. So, next is the cash ratio. It is a measurement of a company's liquidity. So, ang cash ratio naman po ay, yun nga po, na hindi naman na po kailangan explain to dahil ito po ang measurement of a company's liquidity. Parang siya po yung measurement ng ating mga assets, yung company assets po natin. So, next is the liquidity consideration. Ano ba yung kailangan natin mga i-consider? There are 3 considerations po. Are there any liquid assets? Can those assets be extracted from the company? Methods of extraction where cash is available. So, simple lang po. So, sa step 1 natin, ang ibig sabihin po na to ay kung meron ba tayong mga assets. Step 2, can those assets be extracted from the company? Step 2 ay kung kaya ba nating mapapayag yung mga shareholders ng company na gamitin ang ating mga assets. Step 3 is if meron ba tayong i-extract? Meron ba tayong ng ganitong assets? Meron ba tayong gagamitin pambayad or gagamitin pang production? So next is the sales to working capital. Assets, also called working capital, represent items closely tied to sales, and each item will directly affect the result. So, connected po ang ating working capital sa ating sales dahil if the revenue declines and the working experience becomes negative cash flow, maapektuhan po yung ating working capital. So, ayun lang po. Sana po ay may naintindahan po sa aking part. Although, hindi po ako naka-attend virtually. Thank you.